Good morning and welcome to the CIPC Annual Return and SARS Tax Return or Compliance webinar. To give some background about our webinar today, CIPC invited SARS to participate in the webinar as many registered SMME businesses confuse CIPC annual returns with SARS tax returns and vice versa, with the result that they do not comply to both. Non-compliance to either have serious implications for registered businesses. CIPC's registration systems are linked to SARS, and when a business gets registered, it gets a tax number automatically, which is allocated by SARS. Many people that register a business do not know what SARS will require from them once their business is registered. This session is aimed to provide information on annual returns and tax returns with regard to compliance in order to assist registered businesses to comply to both the Companies Act requirements and the income tax requirements. I'm Elma Pinkham from the Corporate Education Unit, and I will be facilitating today's program. The CIPC presentation will be done by my colleague Simon Vignani. As part of his introduction, Simon will make you aware of a Learn-i-Biz course for company directors. His presentation will be followed by Ms. Mpho Motseme of SARS, who will do the presentation on behalf of SARS. During the webinar, you are welcome to post your questions related to today's topic only. We will respond to these questions after the presentations. If you have questions for CIPC that are not related to today's topic, please log an inquiry on the CIPC website inquiry system. Should you have questions for SARS that are not related to the topic, please phone the SARS contact center. The recording of this webinar will remain on YouTube and Facebook should you wish to view it at a later stage. I will now hand over to Simon Vignani for his presentation. Simon has been employed in the education unit since 2014, and before that he was also with CIPC in the patent unit and at one stage with DTI also in the education unit. The corporate education unit that we work for promotes the education and awareness of CIPC products and services. Simon, you may please continue with your presentation.
Thank you very much, Elma. Good morning, everyone. My name is Simon Vignani from Companies and Intellectual Property Commission, CIPC. And I'm going to share with you today on our annual returns, the registration, as well as reinstatement. So the agenda is as follows. We are going to first talk about the Learn-i-Biz, annual returns, followed by financial accountability supplements, AFS, and XBRL. We will look at the deregistration process as well as the reinstatement. As Elma mentioned in her opening, I'll now talk about the Learn-i-Biz. So CIPC has developed the Learn-i-Biz course. It is a short educational course aimed at assisting new and existing SMMEs, company directors to gain basic knowledge of their duties and responsibilities in order to improve compliance to the Companies Act of 2008. The course is free of charge, and anyone who is interested can register on the CIPC website to join the course. The course consists of a number of short videos and a few questions that must be answered after each video. The course should take roughly 2.5 hours to complete. However, one do not need to do it in one sitting. One can follow the course in your own time and at your own pace. Persons that attended the course can obtain a certificate of attendance after completing the course. Please take a note that it is not an accredited course. For more information and inquiries, you can send them to elearning@cipc.co.za, or you may contact our call center. So, ladies and gentlemen, without a waste of time, we'll start with our presentation of the day on annual returns, legislative framework, and platforms for lodgement. So now this is in terms of the Companies Act, Section 33 of Companies Act, and Regulation 30 of the Companies Act. And then we'll also look at the Close Corporations, Section 15A of the Close Corporation Act, as well as Regulation 16 of the Close Corporation and Act. So now you may use the following platforms if you want to file or lodge the annual returns. We, CIPC, we've introduced a BIS portal. So one can file annual returns on a BIS portal. You can also file annual returns on e-services, the old e-services. You can go to our website, and then you can go to a CIPC website, go to e-services, whereby you'll be able to file annual returns. One can also file annual returns at one of our self-service centers and partners site. So for more information and addresses, please visit our website at www.cipc.co. On our homepage, you can click on contacts, and then that's where you find more information or about our self-service centers, as well as our partners. So now, in terms of the Act 2008, all companies and close corporations are required by law to file their annual returns with the CIPC on an annual basis within a prescribed time period. So that one will ask, there are many questions that are asked by our customers as to why do we need to file annual returns. So now the purpose of filing annual returns is to confirm whether a company or close corporation is still in business or trading, or if it will be in business in the near future. So the annual returns may be regarded as a type of annual or renewal of a company or a close corporation. So now, if any annual returns are not filed within the prescribed time period, so now we assume that the company or close corporation is inactive, and as such, CIPC will start with the deregistration process to remove the company or close corporation from its records. So now the legal effect of the deregistration process is that the juristic personality is withdrawn and the company or close corporation ceases to exist. So in other words, you will be removed from our database, or the company will be removed, or close corporation, from our database. So now there's a fee payable for annual returns, of course. Now, what is important is that annual returns are not related to tax returns. Hence, we invited the SARS to come on board or to join us today to share more information on tax returns. So, annual returns are filed with CIPC on our platforms. As I mentioned, even in the previous slides and on these slides, that you can file them on our website on e-services or either on Biz portal, service self-service centers, as well as the partner side. So now payment can be done by either debit or credit cards, or it can be done directly after the calculation on e-services and Biz portal. Even for those who have a customer code, if they have money, they deposit money on their customer code, and then they can use that facility to make payments for annual returns. Now, the other thing that is important with annual returns is that annual returns depends on the turnover of the company. So now let's just take, for example, if a company is making less than 1 million per annum, obviously you only pay 100 rand. And then, of course, if there's a late payment, obviously you will have to pay a penalty for that period. So now, if it's making 1 million and more, but less than 10 million, obviously it will be 450. So I'm just giving that example. And then, but what is important again is that even if the company is not doing any business, but you still have to file annual returns. So now, if those annual returns are not filed at a prescribed time limit, obviously in 2 years' time or so on, and then CIPC will start with the deregistration process. So now it is very important to file annual returns. So now let's just look quickly at the financial accountability supplements and accountability financial supplements, as well as the XBRL. So now before payment or annual returns fees, a financial accountability supplements, FAS or annual financial statement, AFS, must be filed on e-services. It can be filed as part of the AR process or on its own. Uh, uh, on its own. Now, financial accountability supplements are meant for SMMEs. So SMMEs file financial accountability supplements, FAS. But for bigger companies, they file annual financial statement. So these are audited financial statements. So because sometimes it causes confusion. So you need to understand that AFS is audited financial statement that are filed by bigger companies, and it's got nothing to do with small businesses. So now, FAS is a summary of information regarding a company's record keeping and the maintenance of the financial records. Private companies that do not need to submit financial statement must file FAS through e-services. So now, just to advise you, at the time when you file annual returns, you will complete a questionnaire about the finances of your company. So now those questions are related to FAS. So at the time of filing annual returns, then you just need to answer that questionnaire. FAS is an easy questionnaire that has to be answered at the time of filing annual returns. But for bigger companies, these are audited financial statement in terms of Regulation 28 of the Companies Act. It must be filed through XBRL. So XBRL is Extensible Business Reporting Language. So now this is available on our website. You can go to our homepage, you click on resource. That's where now you'll be able to access XBRL, but it's got nothing to do with SMEs. For small business, you file financial accountability supplements. So you don't need to file AFS, which are audited financial statement. But for more information on FAS and AFS information, consult our website. There are also questions there that you can go through them. And then for more information on XBRL, you can send inquiries to xbrl at cipc.co.za. So now all this information is available on our website. So now let's just quickly look at the voluntary deregistration requirement and overview. If you want to deregister your company or your close corporation. So now let's look at there's a section, there is section 82 subsection 3 of the Companies Act of 2008 and regulation 40. So now a business may be referred for deregistration upon application by any party subject to section 82 subsection 3b. So if annual returns are outstanding for 2 or more years in succession, if the Commission believes that the company or close corporation has been inactive for 7 years, or Commissioner received a request in the prescribed manner and form and determine that the company has ceased to carry a business and has no assets, or because of inadequacy of its asset, there is no reasonable probability of the company being liquidated. So now before 1 May 2011, under the 1973 Companies Act and Close Corporation Act, business will have been referred to for deregistration where annual returns were outstanding for a period of 6 months. So now AR deregistration notification of pending registration mailed to the registered postal address as reflected on the CIP's records. And then we also inform companies or CC of intended deregistration if we are just about to deregister some of inactive companies. So let's look at the AR deregistration issues or on notification of pending deregistration. Of course, as CIPC, we are encountering some challenges when it comes to this. Addresses as per CIPC register are outdated. Some of this information is not updated, and therefore some of these notices do not reach the intended destination. Results a high volume of return mail and non-notification. Since notices are sent by registered mail entities, think it is ARTO fines, and then they do not actually collect them at the post office. So these are some of the challenges that we are facing as CIPC. So now some of registered addresses on CIP registers are that auditor or accounting officers, and they do not always action them. E-contact detail incorrect, no legal duty to submit e-contact details. So now with these challenges, we advise all our customers to update that information on our database, so that we, when we send out these notices, and then obviously it will reach them. Now let's look at annual return deregistration or cancellation. If deregistration is due to non-compliance in respect of the lodging of annual returns, filing the outstanding annual returns while in deregistration. If deregistration for any other reason, written objections to deregistration at cipc.co.za. So now, and once a company or CC is finally deregistered, no annual return filing or objection can be processed. Of course, there are also requirements for voluntary deregistration. So they are as follows: a certified ID copy of any of the person signing the request if you voluntarily apply for deregistration, tax number if available, tax clearance, they call it PIN number now. I think Mpol give clarity when it comes to this. Statement confirming that the company or close corporation is not carrying out on business or is dormant, and then the company has no assets, or because of inadequacy of assets, that there is no reasonable probability of the company being liquidated. For the time, turnaround time for the registration is 5 working days to process the request, but it might take up to 4 months because CIPC, if it's voluntary deregistration, they will wait in terms of the Companies Act that they just give that period, that there will be no objections from any other party. And then if there's no objection, obviously they will finalize the registration process. So now for a third party, these are the requirements, and then a certified ID copy, tax number, tax clearance, and then a statement on confirming that the company or close corporation is not carrying out on business or is not dormant. And then if the company has no assets because of the inadequacy of its asset, that there is no reasonable probability of the company being liquidated. So now documentary proof that the company or close corporation is not carrying on business or is dormant and has no assets, or because of inadequacy of its asset, that there is no reasonable probability of company being liquidated. If the third party, the statement must be supplemented with sufficient documentary proof confirming the statement. And then, of course, there are also objections. And then if there's a voluntary deregistration objections, if you object, then the letter must be clearly state the reason of objecting to the deregistration. If the other party applied for deregistration, but the third party also, the other party also object, but it must be a letter written to the registration at cipc.co.za, and then it must furnish us with reasons why you are objecting to that the registration that was actually applied. So now it should be noted that this process cannot be used if the reason for the registration is non-compliance with annual returns. If the company or close corporation was referred for deregistration due to non-compliance with the annual returns, the deregistration process will only be cancelled upon the filing of all outstanding annual returns. So now, in other words, if a company or a close corporation is actually owing annual returns, but at the same time they apply for a deregistration, so now obviously that will not be processed until you file all outstanding annual returns. So now if annual returns are not filed, then they won't process the registration. So now the turnaround times is 5 working days to process the request, and it must be submitted before the date of final deregistration. So now, of course, there are also consequences for the registration, that the legal effect of the registration process, juristic personality is withdrawn. Obviously, it will cease to exist on our database. directors, members may be held uh, personally liable for all debts action that incurred during such period. That is in terms of common law. So it goes on in terms of Companies Act 2008. Removal of a company from the register does not affect the liability of any former director or shareholder of the company or any other person in respect of the act or omission that took place before the company was uh, removed. But in terms of the old Act of 1973, the liability of every director, officer, and member of the company shall continue and may be enforced as if the company had not been deregistered. Continue to exist an association whose members are personally liable for the debts. So in terms of the close corporation, if the registration after 1 May 2011, the same as for companies applied. If it's now if it was before, if it was before, so the same will apply in terms of the Companies Act. If the deregistered before 1 May 2011 repealed sections 26 of the Lawson Corporation Act may apply. If it is before 1 May 2011, but if it's after, then the 2008 Companies Act will apply. But if it's before 1 May 2011, obviously the Close Corporation Act of 1984 will apply. So if a close corporation was deregistered while having outstanding liabilities, the members at the time of deregistration shall be jointly and severally liable. Possible reckless trading if directors, members allows the deregistration while knowing that there's outstanding debt. So now one can also apply for reinstatement if a company is deregistered. It can be reinstated in terms of Section 33 of the Companies Act, Regulation 30 of the Companies Act. So now with close corporation is Section 15A of Close Corporation Act and Regulation 16. So restoration, you first start with an application to restore the company in terms of Section 82, subsection 4 of the Companies Act, Regulation 40 of the Companies Regulation. So now once the restoration is been approved, then you start with the process of reinstatement and then check all the requirements. If you need any other information, that information is also available on our website. And then there are also step-by-step guides that are also available on our website to assist you if you want to apply for reinstatement of your company or your close close corporation. So let's just look at the reinstatement again. That business may also apply for reinstatement upon meeting the requirements. So now grant or reinstatement by a business itself proof that it was in business at the time of being finally deregistered. So it will be required. So proof that it has immovable property is also one of the requirement. Hence, I've said that this information is also available on our website. So we have a step-by-step guides that can assist you when you apply for reinstatement. So now after the reinstatement application has been filed, all outstanding returns must be lodged in order to change the status to into a business. Because remember that the company was actually maybe final deregistered, and then once everything is done, and then the restoration is done, and then once it's approved, that restoration, and then from there you start filing all outstanding annual returns, and then once that is done, obviously the company status will be in business. So now these are some of the forms or documents that you need to use when you apply for a reinstatement. As the form COR 40.5, and then duly completed, and then signed, certified ID copies, certified identity copy of the owner of the customer code is very important. Sometimes it's just filed by someone else. Obviously, if the customer code is not of the applicant, obviously we need the customer code of the owner of the customer code certified ID copy. Proof of that entity was in business at the time of the registration. If the company was doing any business at the time of the registration, bank statement are also one of the requirements, and then sufficient documentary proof indicating that the company or close corporation was in business, or that it has any outstanding asset or liabilities. For example, of property, of intellectual property rights at the time of the registration, and also mandate from the applicant confirming that the customer may submit on his or her behalf. So now you can send it at reinstatement at cipc.co.za, and then the turnaround times is 5 working days to process that request. Reinstatement by creditors. So now it is not advisable for creditors to follow administrative reinstatement process. So now any interested party may apply for reinstatement, but companies regulation 40 state that the process is only complete once outstanding annual returns have been filed. So if there are any outstanding annual returns, obviously this process won't be finalized. It will only be finalized once all outstanding annual returns are settled. Only the company or CC itself has the duty to file annual returns. Creditors are advised to approach the High Court for a court order of reinstatement. If it's creditors are advised to approach the High Court. But for companies and close corporation, they can file these annual returns as part of the requirements to reinstate the company. So court order must be submitted to reinstatement for processing if it was filed by creditors, and then obviously they will have to submit the court order to CIPC using the reinstatement at cipc.co.za email address. Normal processing procedures applies for reinstatement is the same as the when you the request was done by a company or a closed corporation. So once the court order is processed, status change to in business, obviously that will be a change, and then referred back into annual return registration within 2 to 3 weeks. And then legal personality is still intact during the deregistration process. And then now I'll come to the last part of my presentation. And then for any other inquiries, we also advise all our customers to log the inquiries on our inquiry system. And then that facility is available on CIPC website. You go to CIPC website, and then you click on these inquiries, and then you may use your customer code and then password to log inquiries, and then obviously our business unit will revert back to you, or you can call our call center number at 086 100 2472, or you may visit CIPC Facebook. We have our consultants are working there, and then they will be able to assist you. Or you may visit one of our walk-in centers. The addresses are available on CIPC website, and then they will be able to assist you. And then thank you very much for your time. Thank you.
Thank you very much, Simon. I will now hand over to Ms. Mpho Motseme to share her presentation. Mpho is an experienced tax educator who has worked for SARS for over 18 years. She has represented SARS on various external engagements with taxpayers due to her extensive knowledge in various taxpayer segments. Mpho is a member of the Management Services Institute and has qualifications in operations management, project management, and business communication. I want to thank Mpho in advance for her presentation. We appreciate her willingness to join us today and to share the important information. Thank you, Mpho.
Good morning, everyone, and thank you very much, Elma, for the introduction and for inviting us to this workshop. My name is Mpho Motseme, as Elma has said. I am from SARS, from a division called the Text-Based Broadening and Education. And our main mandate is to try and educate our taxpayers, because as much as we do provide the services at SARS, we also need to educate you so that you can understand what SARS is all about. Okay. Can you please press the next slide for me? Elma or Rutsani?
Yeah, I'm unable to, Rutsani. Can you
Both,
please?
you move from your side.
Okay, on my side, it's not moving.
Okay, I'll let my presentation.
Please just give us a second. I think we're about there, but Rutsani will help us with the slides.
Thank you.
We just seem to be having a bit of a technical glitch, but just give us a moment, please, and we'll continue with the presentation as soon as possible.
Can I see my screen now?
Not yet. Should Simon stop sharing?
Let me control it from here. Yes, Simon. Okay, yeah. Remove it from sharing, Simon. But can you remove your screen from sharing?
Simon has stopped sharing.
Bo?
Yes, sir. Yes, Rutani.
I was saying, can you remove your screen from sharing?
Okay. I have.
Okay, thank you.
Should I start sharing?
Yeah, let me see if it's gonna share from my side.
We can see the first slide. It's on.
Oh, you can see the first slide, né? Yeah, now I'm working on that. You see the next page?
Okay, thank you so much. Okay, sorry about the delay. The purpose of this presentation is to merely provide information in an easily understandable format and is intended to make the provision of the legislation more accessible. The information therefore has no binding legal effect, and the relevant legislation must be consulted in the event of any doubt as to the meaning or application of any provision. So as SARS, we have our vision, which is our 2024 vision, where we're saying our vision is to build a smart modern SARS with unquestionable integrity, which is trusted and administered and admired by the government, the public, as well as our international peers. And then for the purpose of this presentation, we will focus on the following strategies. So we as SARS are saying we are going to try, or we are making it easy and simple to comply. And we have modernized our systems, and they are seamless. And we also have our online digital services, and we make it hard not to comply. So by making it hard not to comply, we're just trying to say it is so easy to comply with SARS, especially using our online services. Okay, moving on to the next slide, please. So our points for discussion will look into what are the obligations of small businesses and what is a small business incentive. We'll also look into a turnover tax and the whole compliance, where we're saying if a person is compliant, what do we mean? And we'll also just take a look on our digital platforms that we have as SARS. Next slide. So as a small business, what are your obligations? Next slide, please. What we're saying is that first things first, as Simon had explained, you need to register with CIPC. And once you have registered with CIPC, on the document that they give you, you will see that your tax number would already be populated there because we have integrated the systems. So there is no need for you to come to SARS and re-register for getting a tax number. If the tax number is not populated on your document, then you can then contact SARS, because it means that there might be some information that it is not verified. So you will need to then verify that information. And once you have registered with SARS, what will then be expected from you is that you will then need to declare with SARS. In August, you will then be submitting what we call provisional tax returns, or others might know it as IRP6. And in February, you will then be submitting again the second part of it. And at the end of your financial year, you will then submit what we call an IT14. Your financial year you choose, it's up to you. When you are registering with CIPC, I do believe that they do give you options of choosing which would be your financial year. But the SARS financial year starts from March and it ends in February the following year. And then once now you have registered, your business is registered, what then would be expected from you is that you will then need to register for pay as you earn. And you also, as a director or a shareholder in your business, you also need to register for income tax because you are treated as an employee in your company. And when registering for pay as you earn, you need to register within 21 days of becoming an employer, because once you've opened a business and you have people that are working in your business, you are then regarded as an employer. Then we also have an option to register on e-filing, where you can use the Rev 01 form that you can find on e-filing. Now that you have registered for pay as you earn,
Tanzania, I don't know if Mpo's having a bad internet connection. I think we've lost the sound.
Yeah, we lost her. Maybe you can call her.
We can just get her to connect again.
Yeah, call her.
Come again?
Mpo, we
Yes,
lost you.
sir.
We lost you for a couple of seconds.
Okay, where did you lose me? Sorry about that.
I think you were still talking about the registration.
Okay, the registration for the EMP 201.
Yeah.
The registration for PS1. Okay. All right. Just give me a sec. Okay. As I was saying, that you need to register for pay as you earn within 21 days of becoming an employer, and you can use the Rev 01, which is available on e-filing. And once you have now registered, what will be expected from you is that you will need to make your declarations. And your declarations are due on the 7th of every month. And you'll be using the return that we call an EMP 201 to complete and declare under your pay as you earn. And payments also will be due on the 7th of every month. Okay. And please note that once you are registered for pay as you earn, you'd also be expected to submit what we call a reconciliation, which we have it a biannual reconciliation, which is due at the end of October, which was for 6 months, and the final reconciliation, which is due at the end of May. So currently, the employers are submitting their final reconciliation, which is due on the 31st of March. And with the reconciliation, what then happens is that it is when then people would say, I have received an IRP5 from my employer. So that's what we use the declaration for. And should you then decide to deregister your business, you can do so via e-filing, or you can also do so by coming to a SARS branch. But please remember, you cannot just walk into a SARS branch, but you need to book an appointment. So we do assist people, but you need to book an appointment. And you can also use the contact us at sars.gov.za. And for tax practitioner, you can send an email to pcc@sars.gov.za. Okay, those are the steps that you can follow when you want to deregister for pay as you earn. Okay, then moving along, you have a business that is registered, that is operating, and you are then required to register for VAT. What we're saying with that, we have two types of, or two categories in our registration, where we're saying if your business is making a turnover of 1 million, it is compulsory for you to register for VAT. And if you are not making 1 million, but at least you have made 50,000, you can then voluntarily register for VAT. And when registering for VAT, you would use the form, the VAT 101, that is used to register for VAT. And the declarations for VAT are due on the 25th of every month. And if you are registered on e-filing, then you would have the benefit of submitting your returns at the end of the month, depending on the category that they've put you in. But please remember, if the 25th or month end falls within a weekend, you need to submit those returns and make the payments a day before. Okay, it cannot be late, because if it is late, then you would be penalized. Again, as VAT vendors, you can deregister for VAT. And if you want to deregister for VAT, you would then be deregistering because the business is no longer operational. Okay, am I still audible? We can move
Yes,
to
you
the...
are. We can hear you.
Okay, you can move to the next slide. Okay, I don't know if it's the technology on my side, it's slow, but because I have the presentation, I'll think I'll just continue. Okay, then when moving, we then come to the incentives, which we say the small business incentive. Okay, when it comes to the small business incentive, it is valid. The assessment would be then starting from the 1st of April, and it will be ending on the last day of March the following year. So it should be within that period. And these are the tax tables for the small business corporation, where we're saying if your turnover in a business is 95,750, then there wouldn't be any, it would not be taxable. It will be zero rated when it comes to your taxes. And between 95,751 to 365, it will be 7% of the taxable income above 95,750. So if you have made 365 as an income, you would then need to minus 95,750, and the remainder you will then calculate 7% of that. Okay, so as you can see, the rates on the small business corporation are very low as compared to the mainstream, where we're saying if you are in business in the mainstream, your tax rate would be at 28%. So with these incentives, at least we give you some relief, and the tax rates are very, very little. Next slide, please. So who qualifies, or how do you qualify? Okay, we're saying that the small business corporation, it is not another business type of entity, but it's just merely an incentive. Okay, so the revenue that you'll be making in the small business corporation, 20% of it may consist of investment income. Not more than 20% of it must be from investment income, and not more than 20% income must be from rendering services. Next slide, please. So if you are a sole proprietor, or you are in partnership, or you have trust, you unfortunately will not qualify to be under the small business corporation. And if you are a shareholder or are having shares, it must be of a natural person, and you must be holding those shares for a full year. Okay, and if you have other businesses, it would be advised that you deregister from all the other companies or CICs that you might have, so that you can qualify for the small business corporation. And that would include having your dormant companies, if there's shelf companies or non-trading companies, those would be also included in that. Next slide. When we talk about investment income, we are saying it could be any income that will be coming from your dividends, from the rental of immovable properties, if there is any interest that you are receiving, and any royalties. Those would be, that 20% will be coming from there. And then the next slide, please. And for the personal services, we are saying if the services are rendered through a CC or company, if the service is performed by a member or shareholder, if a person, in the person it includes any connected person, and the connected person is to the family of the third degree, and those would be then not applicable. And when we are talking about personal services, it is the following, as listed. If your business is in an accounting, broadcasting, education, journalism, you are an engineer, actual science, an architect, an auctioneer, you are consulting, you are an auditor or a surveyor. So those that are up there on the screen, those are the ones that we are referring to. So those are the personal services. Please go down. And please go to the other one, please. The connected persons. And when we're referring to connected person, is that you as the taxpayer, if you have a child that you want to start a business with, or you are in business with, and you want to benefit from the small business corporation, you will then be disqualified because the child would be connected to you. Your grandchild would also is connected to you, your aunt, your grandparents, your in-laws. So anybody that forms part of your family is actually connected to you. So what we're trying to say is, you can actually start a business with me. I can start a business with Alma or Simon because they are not connected to me in any form. So when you want to form a part of the small business, or you want to benefit from the small business corporation, you cannot have a business that you have connected persons with. So yes, you can have a business. You can start another business with somebody else that you are not connected with, and you can then apply for the small business corporation. But remember, one of the things that will disqualify you is that if you have other businesses. So it needs you to have only this business. Why that? So that you can benefit from the tax rate, because they're so minimal. Then you would put all your efforts into this business, and as the business grows, then you can then move from this incentive, and you just stay on the SARS, on the income tax, the mainstream, and you'll be able then to contribute 28% of your taxable income. Next slide, please. And then some of the benefits for the small business corporations as part of the incentives is that if you have plant machineries, they can be written off, and we give it 3 years where they'll be depreciating. So on the 5th year, you can claim 50% of it. On the 2nd year, it will be 30%, and on the 3rd year, it will then be at 20%, which if you add all those years, it is, you have then claim depreciation on it over at 100%. And then moving along, the next slide. We also have something that we call a turnover tax. What turnover tax is, we say it is a single tax system which taxes turnover and not profit. Remember, in your normal business life, you would then have an income and you would declare what your expenses are. And from that, we will then tax you. And after being taxed, that's when you will know if your business has made a profit or loss. But when it comes to turnover, we're saying we are taxing you on the whole turnover that you have made before you can even deduct your expenses. Okay. With the turnover tax, it is optional. And if your business is making a turnover of less than $1 million a year, then you do qualify. It replaces the need to account for income tax, capital gain tax, dividends tax, and value-added tax, unless you have selected to be part of the VAT system. The next slide, please. So if you want to apply or form part of the turnover tax, we say that the applications need to be done before the start of the tax year, that is before the 1st of March. Remember, the SARS tax year starts from March and it ends the end of February the following year. Okay, if the business commences during the year of assessment, applications need to be done within 2 months after date of registration. And if a business chooses the turnover tax method, the year end for that business must be the end of February in any year. Okay, next slide. You also have an option to do an online quick test where you will check if you do qualify to register for turnover tax. You can navigate and go to the SARS website, which is www.sars.gov.za. Then you would click on the link or button that's written small business and employers. And then from there, you would then click on the one that says turnover tax, and you will then scroll down on how to register. Then you would click on the quick test, and on the quick test, if there's in any of the questions that they've asked you, you've answered no to it, then it means you do not qualify to be registered under the turnover tax. Next slide, please. And then the application form that we use for turnover tax, we call it the TT01. That is the form that you'll be using if you do qualify to register for turnover tax. And you can submit that form through for tax practitioners, you can send it to the PCC at sars.gov.za. And for any other taxpayers, you can send it to contact us at sars.gov.za. And also you can do so by visiting the SARS branch. But please remember, when visiting the SARS branch, you need to have booked an appointment. And because we at SARS always try and make things easy for you, our taxpayers, we also have a USD channel that SARS offers, where you can dial *134 *7277. Then you will have options there where you will be able to request to see what is your tax number. If you need to know the balance of your account, you can do so. And if you need to find out if you need to file a return, you will have that option. You can click on it and it will ask you your questions, and mainly your tax number or ID number would be required. And also, if you need to book an appointment, you would then click on the request for a booking appointment, and you would then follow the prompts. And another way that we have is that if you go onto the SARS website, again, it is www.sars.gov.za, and you click on the online services, then you will then be able to also book an appointment via that option. So we do have different options. Alternatively, you can also call the SARS contact center and ask to book an appointment. Remember, when booking an appointment, you have an option that SARS calls you back, and you do not need to come to SARS. So you will choose a date and time and the type of request that you need. Then they would call you back. Or if you want a face-to-face, they will then give you will say which office you want to go to, and they will give you the available dates and time, and you can also choose which office and time you want to go to. Okay, so you cannot just walk into SARS, but you need to follow those. Okay, and then for the turnover tax and VAT link, we say if you are a micro business, you are allowed to be registered for turnover tax as well as VAT. That became applicable from the 1st of March 2012. And then a registered micro business may elect also to submit VAT returns on a 6-monthly basis. And that would be people that are falling under category D, and at the end of August and February of each tax year on a normal VAT 201. So when it comes to the categories, SARS decides on what category they need to put you in. You do not choose what category you want to be in. But to simplify what the categories means is that it is the time where you need to submit your return. That's what the categories mean. And the next one, please. Okay, so the qualifying criteria is that businesses with a turnover of less than 1 million per annum do qualify to register for that. The sole proprietors, partnership companies, and co-ops can also apply. It excludes the public benefit organizations, the recreational clubs conducting activities other than the business activities, because they are already enjoying the special tax treatments. Because remember, with the public benefit and recreational clubs, they do apply to be tax exempted. So honestly, they are enjoying the special treatment. So if we then put them under turnover tax, it means that we'll be also killing our economy. Okay, the next slide, please. And then when it comes to the partnership requirements, we're saying the turnover of a partnership must not exceed 1 million also again per annum. However, each partner can apply individually, okay? And that person cannot be a partner in any other partnership. And then the partner may not hold shares or interest in a company, close corporation, or cooperative, other than the exceptions, such as listed under the JSE companies, venture capital companies, and others. And all partners must be individuals. And the next slide, please. What will then disqualify you is that if you have interest in other companies, there will be exceptions and limitations to it. If you are having investment income, you cannot have more than 20, your income must not be more than 20% coming from the investment income. And again, if you are providing professional services, 20% of it cannot be from the professional services. Next slide, please. Next slide. Okay. And then for capital disposals, we're saying that the receipts from the disposals of certain capital items may not exceed 1.5 million in a 3-year period. And for the personal services providers and labor brokers, we are saying a personal service provider or labor broker is disqualified, except where a labor broker has been issued with a tax exemption certificate by SARS. And all shareholders and members must at all times be individuals. Okay, the next slide, please. So if you need to make a decision, if you want to take the turnover tax, these are some of the questions that you can ask yourself. Is keeping record too much of a burden or too expensive for you? Is the current tax system too technical and difficult for you to comply with? Is it costly for you to hire a tax practitioner or meet the requirements for the current tax system? If the business is in assess loss situation, it may be better to stay in the current tax year. So those are some of the questions that you can then ask yourself if you will be able to qualify, or you can then decide if you want to form part of the turnover tax or not. Next slide, please. So these are the rates that we are using for the turnover tax. As you can see, they are very minimal, okay, where we are saying if your turnover is between 0 and 335,000, there wouldn't be any taxes that you'll be paying if you register under the turnover tax. And if it is between 335,001 to 500,000, we're saying it is only 1% of the taxable turnover, which is above 335,000. So if you have made a turnover of 500,000, you would then minus 335,000, and on the remainder, you will then minus 1% of it, and that would be your tax. But remember, you need to do the test to check if you do qualify, because there are some of the disqualifying criteria. Next slide, please. So this is just an overall tax comparison where we're saying if you take a total income, which is of sales of 600,000, and you minus your expenses, which are 180,000, you would then left be 420,000, which that 420,000 would be then become your taxable income. So if you are a sole proprietor, okay, you will then this 77,361 plus the 31% are found on our tax tables. Okay, so you would then look under the tax table of the amount that you've made. Then it will then tell you that it will be 77,362 plus 31% of the amount of the taxable income above 370,500. Okay, and if you are a company, again, you would then see that you would then multiply by the 27%. If you fall under the small business corporation, then it will tell you that it will be 18,848 plus 21% of the taxable income, which is above 365. And then if you take the turnover tax, then it will be 1,650 plus 2% of the taxable turnover, which is above 500,000. So this is just a table for you to play around and compare to see, will you qualify or will you not qualify? Okay, remember the tax tables are available on the SARS website and on the SARS tax pocket guides. They are available on our website. You can always search and they are for free. If you are not far from a SARS office, you can also go in and request for the tax pocket guides. Okay, next slide, please. Please go down. Okay, so as a taxpayer, if we want to be sure that you are compliant, we're saying that you need to be honest and truthful in your dealings with SARS. You must understand and appreciate the risk of non-compliance and evasion. You must submit all your required tax returns and pay the taxes which are withheld by you on time. You must try and always provide accurate information and documents on time. And you must always keep sufficient records of your books, okay? And you must keep them for a minimum of 5 years after you have submitted. Next slide. And some of the consequences, next slide, please. Some of the consequences of not being compliant would be through the late submission. There would be penalties that will be imposed to you, and with the penalties that are imposed, there'll also be monthly interest that will be charged on all the outstanding payments. And if you have understatement penalty, there will be a potential to impose even 200% off the penalties. Okay, next slide. There's also precautions that you can take. Next slide, please. Okay, where we are saying on e-filing, when making use of SARS e-filing, please do not divulge your logins and password to anyone. If you have already done so, you can change the password on your own on your e-filing profile. Alternatively, you can call the SARS Contact Center. They will be able to assist you. And if you think you have been affected by this scheme, we encourage you to call the SARS Contact Center, because there are people who are posing as SARS officials that say that they would assist you. So if you think you have fallen or are a victim of that, please call our contact center so that we can assist you. And remember, SARS does not charge any fee for the services that they are rendering to our taxpayers. So you can always ask and request for identification from a SARS official. Please note, we do not charge for any of our services as SARS. All the SARS services are free. But if you make use of a a tax practitioner or a bookkeeper, they will obviously have a fee that they are charging you. But on the fee, as they are charging you on the fee, next slide, please. Please ensure that they are registered tax practitioners, and they would need you to give you their tax practitioner's number. And on our e-filing system, you will be able to verify that tax practitioner's number. Okay, you will then put in the tax practitioner's number and the security PIN and the verification PIN that the system would then give you. Then you would be able to check if those people are indeed qualified tax practitioners. Thank you. Next slide. And for record keeping, we're saying a person must keep their records and books of account. They must be kept for 5 years, and it must be in the original form, and keep them in a safe place, because should you be audited or we need to do an inspection, SARS will contact you and will need to see and verify all those documents. Next slide, please. And with the digital platforms that we have or are available for SSMEs, we're saying you can register your company via the CIPC, and you can make use of e-filing. Remember, e-filing is free. It is secured, and it's an online platform where it is accessible and available to you 24 hours, 365 days or 66 at your own convenience. And you'll be able to create your own credentials, which is the login and the password. And please remember, do not share your credentials with anyone. Okay. And as SARS, we have our online query system where we make it easy to use our online platforms, and you can access them via the SARS website, which is www.sars.gov.za. And we obviously are required to have internet access. And then we also have have introduced what we call the SARS Mobi app, which is downloadable on our smartphones, because we believe most of the people have smartphones now. So you would go into your app store and you would download the SARS Mobi app. So the SARS Mobi app works as exactly like e-filing. So if you are not using a computer, you can always use the SARS Mobi app, and the credentials that you are using on your e-filing are the ones that can be used on the SARS Mobi app. Next slide, please. Okay. And with that being said, I'd like to thank you for your time and for giving us a chance to come and explain to you how SARS works. And you can always visit our social media platforms via LinkedIn, Facebook, Twitter, and the SARS YouTube channel. And for the small businesses, you can go to the SARS website. Again, it is www.sars.gov.za, and you can click on the businesses and employers and small businesses. That's where you would find more info on SARS. And if you have any questions, you can navigate the page and you can then get started. Thank you for your time, and please remember, the real receiver is the country. Thank you.
Thank you very much, Mpho. Ritzani, you can start now with putting up questions for us. I just want to see if I can see it from my side. Our internet connection has gone a bit slow here. There we are. Okay, thank you. The person asked, I registered the NPC last year, not sure what month, but struggling to get my certificate to open bank account, and also don't know when the annual return should be submitted. Please advise. And the person gives the name of the company and the registration number. Simon, can you comment on this, please?
Can you hear me? Good morning.
Yes.
Is it Carmen Benson? With your password and customer code, you can log
Ruzani,
in.
we're
Yes.
hearing you.
Yeah. Yeah. Okay. Yeah. I was responding to Carmen. You can log into the system, go to certificate and disclosure to download the documents.
Okay, sorry, I didn't realize you were assisting us with answers as well. Sorry very much. Can you just repeat it once for Carmen, please?
Okay, now I was saying she can log to CIPC website, go to certificate and disclosure, and then download the documents from there.
Thank you. The next question, please.
Yeah, now I'm pressing through to check which are relevant because
I know there was also a question, you might have skipped it, but where the person asked whether the BIS portal works the same way as the e-services when you file annual returns. Simon, you can answer that one so long whether this portal works the same way as e-services when filing annual returns.
Yeah, I think they want to say, unless if the colleague can add on that. But according to my knowledge, yeah, they are the same.
Okay, thank you. We're just scrolling through the questions to get the ones that are applicable to today's subject. One of the people asked here, when does the penalties accumulate? Simon, or Zani, if you can just respond to that one. Yeah, just ask you respond first to the question, when does the penalties accumulate?
Yeah, thank you very much, and then remember the annual fine, the late payment of annual returns is that when you fail to file annual returns at the prescribed period. And then, say, for example, we just give you an example. If you were supposed to file annual returns today, maybe the due date is today, and then obviously they will, if you don't file today, obviously they will add 50 rand, and then come again next year, and then you fail to pay, they add another 50 rand. So that's why the money it come it keeps on piling and so forth. So that's why it's very very important to file annual returns at the prescribed period. Thank you.
Okay, our next question was, if an entity has been placed into final annual return deregistration due to non-compliance, how do we reinstate by filing the outstanding returns? Do we need to file a formal restoration application first? The CIPC system does not allow for filing annual returns once a final annual return deregistration shows.
Thank you very much, Elma. Remember when I was presenting, I explained, how to reinstate a company. Say, for example, that your company is in a final deregistration due to non-filing of annual returns. So obviously you won't be directly go and file the outstanding annual returns because the system doesn't allow you to do that. So what you need to do now, you go back and then you need to first apply for a restoration on COR 40. And then I explained, and then once that is done and is approved, obviously there are requirements that you need to comply with. And once that is done and then is processed by CIPC, then that's when you'll be able to file annual returns. And then I explained that that information also is available on a CIPC website. If you need more information, please go to a CIPC website, that is www.cipc.co.za. You may also check the step-by-step guides, to assist you. We have different step-by-step guides available on our website to assist you when you want to apply for reinstatement of your company or close corporation. Thank you very much, Emma.
Okay, why does CIPC continue to add annual returns on final deregistered entities? This creates an issue when trying to reinstate the entity as the AR must be paid for.
Rosanna, do you need to come in there? Rosanna?
You can go in.
Yeah, please assist with this one.
We need to consult with our legal team and find out how it works. But like you said, Simon, companies are required to pay annual returns annually. So the system.
Okay, can we just ask that the person please log a query on our website, and then the applicable unit can respond to the question, please.
Okay.
Thank you very much. Then our next question, I think, is for SARS. It says, if a company was correctly deregistered by CIPC in 2018, but SARS income tax number was never deregistered, how do we now deregister the company income tax number at SARS 2? They have sent final demands for outstanding ITR 14 returns for 2019, when it in fact did not even exist anymore. Paul?
Thank you, Taylor Peterson, for your question. After you've deregistered with CIPC, and I believe they do give you a document, you need then to come to SARS to deregister your company. In this case, what you would then need to do is to submit a nil returns from 2019 to date. And if they are requesting a supporting document, then you will then give them the supporting document that you received from CIPC when you were deregistering your company. Thank you.
Thanks, Mpho. Next question.
Maybe Elma can answer this one.
Sorry, there is a question. Will there be any information provided on the new requirements of submission of a beneficial ownership that has become mandatory? Okay, the regulations, I think, only became available yesterday. We will very soon be having a webinar, perhaps even more than one. So unfortunately, I can't keep the date because we only received the regulations confirmation late yesterday, but we will be soon advertising. So please keep an eye on our Facebook and YouTube. And we'll also, I see people say we did not advertise this time on the website. We'll also post it on the website. But yes, we will be I think it will be during June. So we'll get it done as quickly as possible. Thank you for that question. Next question, please.
Checking.
Okay, I think this one is also from Mpho. It says, SARS, why you would tax a small struggling business while you don't tax foreigners that are having stores and operating spaza shops and supermarket stores that accept cash only. Paul, do you have a response to that?
Thank you, Elma. Simpium Kalipi. All businesses, if you have a business that is registered, you need to declare um, your your earnings or your activities to SARS. So as much as the small business is struggling, if by right you have declared um, the activities of the business, you would find that there wouldn't be any taxes that would be imposed to you. And you would also be advised on the different types of incentives that we have that you would then benefit from. Okay. And if, say, your business is operating and it is running at a loss, if you are declaring with SARS and submitting your returns, that will then be kept as for that particular year as a business that did not make any income, but it ran at a loss. And when it is kept, it means that you will not be taxed. And come the following year, you still run at a loss. We will add it, the loss that you've made in the following year, we will add to the previous year up until you get to a point where you have made a profit. We will then minus all the losses you have made before we can even tax you. And that will only be possible if you are submitting your returns. So if you are not submitting your returns and we eventually track and find you, then you will be taxed. You will then have penalties. And for the foreigners that have shops that are operating, you can please report that to SARS, because we might not even know that they exist. But it is the responsibility of all of us, the citizens, to report such, because at the end, whatever that SARS is collecting, we all benefit from it as the nation. So please, in future, if you have such info, please do flag it at SARS. You can be anonymous, give us all the details, and we'll follow up. Thank you.
Okay, there's a question. SARS and CIPC, it's, I think, more common, should make it easier to appoint a public officer. CIPC should have an option to do this via their system, as SARS is very time consuming, then it should automatically pull through to SARS. Okay, I think, as I said, that wasn't really a question, that was a comment. And Rizani, are there more questions?
I think there was a question. Are you going this one?
Okay, are you going to be covering the new filing requirements or supporting documents for annual returns as per the revised regulations that are effective from yesterday, 24 May 2023? I did comment on it a little bit earlier that we will be hosting a webinar, or perhaps even more than one, quite soon. And we've not got a date as yet because we didn't know it will come through yesterday. But we will be arranging here at CIPC for such a webinar. So please keep an eye on our website and on our Facebook and YouTube for notices. The next question is, if other businesses are trading, then you don't qualify, but if they are not trading, you qualify for SAPC tax rates. Info?
Thank you for that question. If other businesses are trading, then you don't qualify, but if they are not trading, you qualify for SPC tax rates. You will need to deregister from all the other businesses for you to qualify. Thank you.
Thank you. Could I just mention, if you have a specific question regarding a specific business, which relates to any of these topics. Remember that if it's a question for CIPC, then you should log a query on our query system on the website, because we are unable to look into your problem here during the webinar, and the specific unit must respond. And if it's tax related, then you must contact the tax contact or SARS tax contact center. I just want to post a question here that I see. It says currently the system error on TCPs, or are there currently system errors on TCPs? With the new companies registered in May this year, the TCC show IT for 2022 is overdue. This is impossible as a company did not exist and clients lose tenders. Mpho, is there a reply on this, or should the customer contact your contact center?
Can they please contact the SARS contact center? I was not aware of any system errors, but as I was engaged in this, I'm not sure what is happening behind. Sorry about that.
Okay, thank you. I'm not sure whether this is a SARS question. It says, is it 50,000 Rand voluntary registration turnover? Must it be yearly or monthly?
I think it's for SARS on the VAT registration. So the 50,000. Okay, remember I said if your turnover is 1 million over the year, which is per annum, it is compulsory for you to register for VAT. However, if you have made 50,000, you can then voluntarily register. So let's say within 3 months, you see that you have made 50,000 on different months. It doesn't mean that it has to be on 1 month, but 3 months combined, you see that your turnover, at least you have made 50,000, and you see that there is a need for you to register for VAT because of the type of services that you are rendering. Then you can voluntarily register for VAT. They will request you to submit your bank statement, and you must have invoices that were issued to you that would be reflected on your bank statement. So the amount on the invoice should correspond with the one that will be on your bank statement. Then you can voluntarily register for that. Thank you.
Thank you, Mpho. I think this one is an AR question. It says, reference a penalty on late submission of annual returns. If an AR is late, do they pay 150, that is 100 fee and 50 penalty, or is it 100 plus 150 gives you 250? Ritsani or Simon?
Okay, good morning. 50 Rand now. To apply the submission of minority pay, here is to the PO 150 or 100 Rand fee, and penalty is it 100 plus 150. That is 250 is for 100 and 100 Rand, and 150 is for CC. 100 Rand and 50 Rand and for company that makes that less than 1 million turnover.
Okay, thank you, Ritsani. So one must check, is it a company or is it a CC? And then look at the table we had in our presentation to see what the fees are. And yes, you add the fee plus the penalty fee together to get to the amount. Okay. I noticed there's this question. What happens when a company applies for deregistration but the bank account is still active? The company must close their bank account, as far as I know. Ritsani, do you have any other comment there?
I agree. Yeah, 100%.
Okay. I see there's this question. Good morning. I registered with DSD NPO. So my question is, do I also have to register with SARS for annual returns, and what are the steps if I do so? So if I understand this question correctly, this is not a company that's registered with CIPC. It's a non-profit organization that's registered with the Department of Social Development. Nicole, could you perhaps comment on that one?
Thank you for your question, Taban. You would also need to register with SARS. You can come to the SARS Pretoria office on the second floor. So when you come from reception, you would then ask them that you want to go to the tax exemption unit, and they will give you the application forms with all the requirements, and you will then be able to complete your application form. But remember, even when you need to then be submitting your application form, you would still need to make an appointment with SARS so that you can be assisted. But for you to just get the application form and the requirements, I believe you can just walk in. They'll be able to issue those to you. But the consultants are there. They'll explain everything to you, and you should be fine. Thank you.
This question, I just want to mention, Monique asked about this portal. She hasn't had success applying for a banking account. Perhaps she can just log a call with our ICT to inform them about her problem. I also see somebody asked about steps to register NPC. They can check our website. There are step-by-step guides how they can go about that. Paul, there's a question. When a company is deregistered at CIPC, why is it not deregistered at SARS?
Okay, I believe it is because these are two separate organizations. Yes, when you are registering, we try and make things easy for you not to come to SARS, but when you are now deregistering, it's a different process altogether, because you might be deregistering, but you still have outstanding returns. So let's say when it comes to SARS, you are compliant. Yes, your business is not operating. You are submitting nil returns. So when it comes to SARS side, you are compliant. But on the CIPC side, you are not submitting the annual returns. And it so happens that you need a tax compliance certificate from SARS. We will not be able to issue that for you if you are not compliant on the CIPC side. And also, again, if on the CIPC you are now undergoing a deregistration, so nothing can be done. So what I'm trying to say is that you need to treat these entities as two separate entities. So on the SARS side, you need to be compliant with everything that SARS is requiring. And on the CIPC side, you also need to be compliant on their own side. Thank you.
Okay, thank you. I have this client says CIPC does not give any documents on deregistration of a company. Lutzoni, can you comment on that?
There must be a response from the office. They will always.
Simon, can you just respond there?
On the company documents, the status of the company will say deregistered.
Okay, and they do get notifications in any case of where the process is, or
Yes.
when it is deregistered.
When it's finalized, they get a notification.
The customer is saying, how can I reinstate my business? I registered an entity in 2017, didn't have knowledge of running a business like filing taxes.
Thank Thank you very much, Elma. And then
And Simon, may I just add, he also, I see there's a second line where he said the business didn't make any profit through its lifespan.
okay. Thank you very much, Elma. And then I explained about the processes for reinstatement. That the information is available on our website. If a company is deregistered and then you want to apply for reinstatement, first you need to complete the COR 40, and then I think there's a fee payable for that. If I'm not mistaken, it's around the 200 rand. And then once that is done, there are also other requirements that you have to comply with. And then I said that that information is also available on our website. You can visit CIPC website, and then you can also check the step-by-step guides that are available on reinstatement. And then from there, you can apply for a reinstatement of your company or close corporation. Thank you.
Okay, this question says if you register a small company with CIPC, you also need to go to SARS or automatically CIPC register you with SARS. It was mentioned in CIPC's presentation. I think that you automatically get a tax number, so you are basically being also registered with SARS. Please check the documentation you get when you register with us. Thank you. This one is for Mpho. With regards to tax compliance certificate, how can we go about generating this?
Thank you. If I'm understanding the question correctly, you can go, if you are registered on an e-filing, you can apply for your tax compliance status via your e-filing. And remember, for you to receive that, as if you are registered, you do not have any outstanding returns, there isn't any debt that you have with SARS, and then you'd be able to receive your tax compliance certificate. Thank you.
Okay, there's this question. I sent all the documents to SARS to deregister a company 5 years ago. Why does it take so long for SARS to deregister a company? Mpho?
Thank you, LZ. The question that I will ask, did you attach the notice or the deregistration that was done under CIPC? Because if you did not deregister with CIPC and you only come and deregister with SARS, then I believe they do not action that. So what you would then need to do is to continue submitting zero returns. Thank you.
And the next one, what are the ways we can generate the tax clearance on SARS, and what information do we require? Can anyone generate the tax clearance? Mpho?
You have an option to get your tax compliance status via e-filing, or alternatively, if you have booked an appointment and you go to the branch office, you will then be able to apply and know what your tax compliance status is. The information that will be required would be the info. If it's an individual, it will be the information for the individual. If it is for the business, it will be the information for the business. Thank you.
Also for Mpo, if your turnover exceeds 1 million, but 800,000 is zero rated exports, do we still have to register for that?
Yes, you will still need to register for VAT. And when you are then submitting your returns, which is the VAT 201s, you will then declare that, and a calculation and assessment will be done. But you would still need to register for VAT. Thank you.
For the person, I'm not going to put it on because it's not related, but who wanted to know how to get a refund if I deposited with a wrong reference, please check our website. There is information how you can request a refund. Thank you. A client saying you can't have to be compliant with both SARS and CIPC before you can apply for deregistration. I don't know who should comment on this because she's asking about having to be compliant first with SARS and CIPC before you apply for deregistration.
Yes, thank you very much, Elma. I think here now I also explained on my presentation when I was talking about the registration process, and then in most cases whereby a customer apply for the registration, and then I explained that if the outstanding annual returns, obviously that the registration process won't be will be declined. And I'll assume that one of the requirements again is to make sure that everything has been filed with SARS when it comes to tax returns as one of the requirement for applying for the registration. So yes, obviously you need to comply with both CIPC and SARS before you apply for the registration. Thank you.
Thank you. I think this one is going to be our last question. Paul, it says on tax compliance, what are the really necessary or necessary documents and information that must be submitted?
Thank you for the question. There's really no documents that you would need to submit. Remember, when we are checking your tax compliance, we are running it through the system. So the system will check your compliance in all levels. If you're registered, there are no outstanding returns and you are not owing SARS anything. So there's really nothing much that you will need or be required to submit, but you will just complete all the information that is required, which is the information of the business. And then the system will tell you if you are compliant or not. And if you are not compliant, it will tell you, it will be red in color. And on the parts that is red, let's say for an example, it's red on the returns. When you open in the returns, it will tell you exactly which returns are outstanding. So if you are registered for VAT, it will show you that it is the VAT returns from this period that are outstanding. If it is for your IT14s, it will also tell you. So it will tell you in details which returns are outstanding. And if you have any debt with SARS, it will also give you the full amount of debt from SARS. Thank you.
Thank you, Mpho. If I may slip in a last question from the same person, they just added it now. It says on importing, is ground nuts allowed on the import list, or if you can just advise, please.
Okay. On that question, I'm not really sure what their list on import goods are. We would have to find out from the customs side what is applicable on their list. Thank you.
Okay, thank you very much. with that, we've come to the end of our webinar. I want to thank everybody that have attended our webinar today, and also again for Motseme. We really appreciate your time that you spent with us. I think many people got valuable information, and we really hope that our webinar added value to our customers. Thank you for joining our webinar and have a good day. Bye-bye.